Hey there, welcome to Real Estate Divas. Today we're going to be talking about hedge funds and REITs and how you can invest passively right after this. Hey there, welcome back to Real Estate Divas. I'm Jay Lee Thompson with Texel and Real Estate Reformation.
And I'm Kristen Gerst with Capricorn Mortgage Investments, and we're talking about REITs and hedge funds and what the heck they are.
Yeah, for the longest time I was like, what the heck's a REIT?
Yeah,
REIT?
well, you know, you hear about REITs involved in buying real estate, and what exactly is this thing? So I think most people out there know what a mutual fund is.
Yeah, I mean, and I think that's a great correlation whenever you're like trying to compare the two or explain it to somebody.
Yeah, a hedge fund is basically a mutual fund, but we'll say it's on steroids because they're a lot less risk averse. So they want to have higher rates of return and they're willing to do riskier investments to get there.
Which, you know, if you're already a real estate investor, then this makes total sense for you, you know, because you're already investing. It's not like what you're doing is not risky. You're investing in real estate. It is risky. We see ups and downs all the time. So, you know, investing in the hedge funds and the REITs, even though it's a little more risky than some of the other investments you might make, I'm assuming that they're probably more profitable too when they're paying off.
Right. And so a hedge fund, a REIT is always a real estate hedge fund.
Okay.
But a hedge fund is not necessarily a REIT. So hedge funds by themselves, they can invest in anything. Companies, they can just buy stocks, buy and sell stocks. They can short stocks. They can buy stocks the right way. Or I don't know that shorting is actually wrong.
Yeah.
They can invest in cryptocurrencies.
Yeah.
Things called derivatives. They can invest in foreign currencies. So let's say they want to, invest in the Japanese yen. A hedge fund can go do that. If we're talking about a real estate hedge fund, it is purely real estate based. And then if they follow a certain amount of rules, they get to be tax exempt, corporate tax exempt, and that puts them into a REIT. So the majority of real estate hedge funds that you'll see are actually REITs because they want to avoid corporate tax.
Nice. And so the corporate tax, that's just for the REIT. Now, when you're getting, because they pay out, that's why you invest in them.
They pay out really well. So there's something called dividends, and there's a lot of publicly traded companies that pay dividends. Again, if you go and say, oh gosh, I want a list of all companies and the dividends that they pay, so every month or every quarter, you're going to get that amount of money back for every share that you own. In a REIT, they pay really good dividends. So you're able to invest and buy so many shares in a REIT and actually get some good cash flow doing it.
And then that cash flow though, okay, so, the corporation, if it qualifies, they're tax exempt, but if you're getting money, then obviously you're getting money because that's passive income coming in.
Correct.
And you're going to be taxed on that.
As ordinary income.
Yeah.
So,
okay.
and a lot of times they will suggest that you buy, if you're going to invest in a REIT, you're going to buy your shares into like an IRA so that you can tax defer all of those.
Yep.
Or, if you've got something like a Roth IRA, then you won't pay tax on it at all if you take your profits out, after 59 and a half.
Yep. Okay. Well, then that clears that up, like the difference between the hedge funds and the REITs.
Right. And I mean, mutual funds and hedge funds they're both just pooling capital. And think about all the people who we know who they go in and say, okay, well, I want to buy this piece of property. And they might have 5 or 6 different investors on that piece of property pooling funds into it. It's basically kind of like a private
REIT.
hedge fund, or what are you offering in return? You're offering a percentage of the cash flow, percentage of the profit. So again, we do it on, individual investors will do it on a much smaller scale. If we're just going to go through what are the rules to being a REIT.
Yes.
They need to return a minimum of 90% of taxable income in the form of shareholder dividends each year.
So I know that's why so many people get attracted to the REITs, is because they do have to pay out so much, which is super sexy. You want that money coming in, but then they are a little more risky because they're paying out all of that, right? And so they don't get to keep much to reinvest.
That's correct.
Okay.
So, because it's got to go back out in the
Exactly.
form of dividends. So they're not allowed to keep, it's not like they're profiting at such a high rate. They're not saying, okay, well, we will give you this flat, 8% return. It's going to be high. They need to invest at least 75% of their total assets in real estate or cash. And that's also to be called, a real estate investment fund. Receive at least 75% of gross income from real estate in rents or mortgages or however they're doing it. After their first year, they have to have a minimum of 100 shareholders and have no more than 50% of their shares held by 5 or fewer individuals.
Gotcha. So let me ask you this. If it's a private, then, obviously you're out there and you're soliciting for people to invest in your REIT.
Yes.
Correct? As long as it's set up properly and everything. But if it's
properly,
public, then that's something that
you can invest on. You can buy shares on the New York Stock Exchange with your whatever brokerage account. You have an E-Trade account. You can take cash in your E-Trade account and go purchase a REIT.
Same as any stock.
Same as any common stock.
And so the REITs, like I know you and I talked about it prior to the show, we're talking about they can be very specific in the way that they're set up. Now, is this something, whenever you're doing, because I know when I was looking into REITs and doing some research and stuff, it was one of those, everything you read, just kind of like everything we do in real estate, is do your due diligence.
Yes.
Because not all of them are set up, even though there's these rules and regulations, they're not all the same.
So there are, just like in real estate, where there's a million different ways to make money in real estate, and you will find your niche and you will invest just in that way. Even for me in mortgage note investing, I really have one finite thing that I focus on. There's maybe, another 100 ways in mortgage note investing that I don't focus on.
Yeah.
So I'll send those out places. It's the same thing with investing in REITs. So do you want a REIT that is an equity REIT, and it will do things like it will be the landlord and own the property?
Yep.
Then they've got REITs that are mortgage REITs. Sometimes they put a lowercase m in front of those REITs. They are only the debt holders.
Gotcha.
So they only buy and sell mortgages. They don't own any real property whatsoever. And then they've got hybrids that do a mixture of both. You look at those, then they get broken down further. Are they public? So that means that if it's public, then it is regulated by the SEC. And is it traded? That means that you can buy shares easily, buy and sell shares easily on the exchanges. Whoever is hosting those, is it NASDAQ?
And
is
I
it
would
New York Stock
imagine
Exchange?
that the ones that are public, it's easier to do research on those.
Yes, in the research, because it is public, and because it is regulated by the SEC, and it's a publicly traded company, publicly traded REIT, they have to have full disclosure on everything that is in
their portfolio,
in this specific REIT, how it's performing, what the appraisals are. So it's very easy to delve into those REITs to see what it is. If you go to a REIT that is public, meaning it is still regulated by the SEC, but it is not publicly traded, you can still find these, different platforms to go purchase shares of these REITs, but it's not going to be as easy to liquefy these because there's not the amount of investors on them.
Gotcha. So I know you did some research on some of these platforms you can go find them on. And I swear I looked at some of these and I was like, what What in the world?
What was it? Rich Uncle?
Rich Uncle.
Rich Uncle was my favorite that I found.
That sounds super shady. You guys, if anybody out there is
richuncle.com.
Yeah,
right. If
anybody out
have
there-
Only
gone on that
$9.99 a
platform-
month.
If y'all are investing on that platform, I want to know specifically. I want to know what y'all are doing. I want to know. I just think it's funny.
Yeah,
Like,
and I went and looked at
is it as shady as we think it is?
Realty Mogul. I
Yeah,
mean,
that one doesn't.
I mean, okay.
But whatever, you know.
But again, it doesn't, I mean, it just, yeah, it's not like you're, going with your brokerage account and going and buying something that is legit. These are not legit. Well, they could be.
Yeah.
It's just, you just don't know. Again, the data that they put out, they're SEC regulated, but when setting up that REIT, they don't actually have to disclose what the value is of all these assets until 18 months after they stop taking shareholders in it. So they've offered this REIT. They're taking positions in it, but you don't actually know how much any of this stuff is worth that you're buying. So
when you're doing the offering, because I know that 18 months is a long time to like not know anything. And like we mentioned, you were saying earlier, if you go ahead and invest and you're one of the first investors, like what's the window? Is that the
it could
year?
be 5 years.
They
could be taking investors for 5 years.
And then it's really whatever they set up, okay, gotcha. All right, I didn't know if that correlated with that 1 year that we were talking about. You have to have 100 shareholders within 1 year.
No, I mean, you can have 100 shareholders and take them,
still,
but it's 100 minimum.
Yeah.
So, I mean, you could have 200, you could have 500. Now, if you're still taking shares in this, what's your target?
Yes.
Is your target 250 and you got 100 after 1 year?
Yep.
Maybe, you don't have to rush out and get another 100. You could maybe get.
And so that's open, and then they have another 18 months after that to report to you.
After they stop taking investors, which is kind of an open-ended discussion. So, yeah, if you're in there on day one, it could be years before you actually get to know really what you bought and what everything's worth. Now, I mean, there's also some argument that real estate does seem to just keep going up in value, which we've been there before in history and know that that's not always the case. But if it still appreciates in value, I mean, it's still a safer.
Yeah. Well, I mean, then we're talking about the long game, because that's really what real estate can be. When we know it does the ups and downs and stuff, it's about the long game. I mean, you can make a lot of money in the short time in any market, but if you're doing,
right,
I mean, if you're banking that it's always going to go up, then yeah.
And then the third type is the one that's not regulated and it's not traded. So these are closer to something like a close family and friends.
Okay.
But still, to get that tax exempt status, to not pay corporate taxes, on the actual real estate investment trust, the corporation part, that one, I mean, you still have to have a minimum of 100. And again, there's ways to get around that.
Yeah.
You have to. You can always say, "Oh, well, I was Facebook friends with them," right? You say somebody,
and now they're an investor, but maybe they didn't give you anything. Like you just gotta. Do you have to put them on a document and turn it in, or do you know?
I think if you're, I mean, to the IRS, yes.
Yeah.
I mean, you're going to have to file that and say these are, and I don't think you have to have personal information about them.
Yep.
But at the very least, you'd have to have some names, and if the IRS decided to come audit you, it'd have to be a little more than just a name. I would imagine
I would imagine too.
You'd have to have some tax information about them.
Well, and as far as real estate investors, like we were saying before, like this is just another avenue. It's just another way to like invest in real estate. You already, have a fairly good mind. If you're doing real estate, you got a fairly good mind of what that entails, So this is a passive way to invest in real estate.
Yes, and it's also good, especially if you were, I don't know how small you could do as like a partial share, what the smallest share is, but there, I'm sure that there are platforms like Robinhood, where you can buy partial shares of anything, that you go in and buy a partial share of a REIT.
Interesting.
So it might be the answer for somebody with a low balance IRA.
Yeah.
if they just want to invest in kind of a handful of different things.
And see how they pay off. And with them paying dividends, then you get that.
So again, it's all about doing due diligence. And the ones like that are publicly traded and regulated by the SEC, their returns are lower.
Yeah.
They might only be 4 or 5%. Then there are also some REITs that, if you can get shares of them, some of them, for last year returned 150%.
Wow. Yeah, I know of one in particular for another show, but it was a 30% return. Not bad. Not bad.
Yeah, I mean, if you can find a bunch of REITs that are returning, 30 to 50%, it's not a bad place to park your money, no matter what size it is. It should be noted that those private ones, they are a little bit pricey to get into. So if you are starting with small balances, it's probably not going to be a private one. Those typically start at around $25,000.
Yeah.
But go on up. I mean, I've seen them at $100,000, $250,000. So they can get pretty pricey for
interesting.
To do it for a buy-in.
Well, what else do you got to tell us? Is there something, another thing, or another characteristic about the REITs that really make them so charming? Besides, seriously, people do your due diligence.
Well, and I think it's with the due diligence.
Yep.
If you are not well versed in a specific type, so for me, I would be interested in mortgage REITs, just because I thoroughly understand those. I also understand, landlord REITs as well.
Yep.
And those would interest me, and I'd want to see, what the returns are, or a hybrid. But if you only know one of those and you know nothing about investing in mortgage notes, maybe stay away from that one.
Either that or hire a professional. I mean, there are plenty of brokers out there that can help you find a good REIT to park your money in, or just invest in general. I think that what I find most interesting in this community in general, I'm not just talking about where we live, I'm talking about, the investor community, is how much money they end up investing in, in hard real estate, but how little everybody invests anywhere else.
I'm guilty about that.
I am too. I mean, I've just recently started changing that, but that's also because now it's not something we've been educated on along the way, even though it's basically the same thing. We're talking about investing with a group of people that are investing in real estate, and then they're just paying you for the money that you're lending them so they can go invest, basically.
Yes.
Yeah. And so it's just wacky to me that there isn't more talk about this.
Well, and that's all a hedge fund or a REIT is. It's just you are giving money for experienced investors, or who you hope are experienced investors, to invest on your behalf. And you're getting a rate of return for that. If due diligence is not your thing, they also have mutual funds of REITs.
Yes.
And that's great, because is your return going to be super high? Probably it's not going to be 30 or 50%, but it'll be safer than just willy-nilly throwing a bunch of money into stuff that you really don't have any clue what's in there. Yeah,
exactly. And I find that, at least recently, the brokers that I've talked to, they're really informative. If you just sit down and start asking, this is how risky I'm willing to be, and most of us are not risk adverse in this industry.
No.
So this is how risky I'm willing to be. This is how much money I have. What can you do for me? I'd really like to pay more attention to real estate, REITs, hedge funds, that sort of thing. So, I mean, I encourage everybody. It's kind of like sitting down with a realtor. You're not paying them for that. They want your business, but it's an education.
Well, it's passive income.
Yes.
So this speaks specifically to people who only wholesale or people who only flip, and you don't have passive income too.
Yeah, there's nothing passive about those two.
But investing in a REIT is something, if you only know real estate and you don't know companies, investing in a REIT is a pretty good option for you.
Absolutely. Well, thanks for all the research and good information. If you guys have any questions or any tips about REITs and hedge funds, then
or if you have a good tip
on
one that's done really well for you, over the last couple of years? I'd love to know that one.
And just drop it in the comments, subscribe, like, follow, all of that business. I am Jaylee Thompson with Texel Real Estate and Real Estate Reformation.
And I'm Kristen Gerst with Capricorn Mortgage.
Thanks for tuning in.
Check the mic and make sure it sound right, boys.